Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Michael Normyle. He's U.S. economist with Nasdaq, and we're going to discuss what are some of the issues facing the millions of people out of the labor force. Very interesting topic, Michael. But before we get to that, I want to talk about fears of the Fed and how that's kind of overshadowing what the positive economic data that we're getting in.
Sure, yeah, markets over the last week or so sold off about 2 or 3 percentage points, and rates, the 10-year yield was up about 25 basis points all the way to 3.35%. And that was reflecting kind of hangover from Jackson Hole, where Fed Chair Powell's speech had kind of created a fear of how much the Fed will be hiking and if that could potentially cause a recession. We saw a little bit of reversal of that today. Maybe markets have realized it could have been overdone a bit, but that was the kind of prevailing sentiment in the last week.
Yeah, well, September, historically the most volatile month of the year as it is. Investors appear to be more worried about rates than they are with the energy shortages, which is a bit surprising to me.
Right, yeah. Russia's decision to halt gas deliveries to Europe via the Nord Stream 1 pipeline was kind of taken in stride, which kind of was a bit of a surprise. You would think, since it's such a big decision, and it's
it's obviously going to impact prices for
right.
for the Europeans and so forth, and we've seen what that has done, even on our side of the pond, just how much that can impact consumer spend and other discretionary items.
Right, and I think it reflects also the steps that Europe has taken to prepare for this, because this threat has been kind of looming for a few months now. So taking steps to get gas inventories up to 80%, which was a goal for October 1st, and also moves to cap how much households will spend on energy. And so in the U.S., we've seen the same thing, where energy prices have come down, and that's helped, propel spending. But the news in Europe on the Nord Stream 1 pipeline, plus the Fed fears over rate hikes, has kind of overshadowed, like you were saying earlier, the good economic data we've seen lately, headlined by Friday's jobs report.
Let's talk about jobs for a moment here. Unemployment rose, but it's not that bad. It kind of is okay.
Right. It was. It rose to 3.7% from 3.5%, but that was actually good because it was from more people rejoining the labor force and not from people losing jobs. We added 315,000 jobs in August, which was kind of like a Goldilocks jobs report, not too hot, not too cold. In July, we saw over 500,000 jobs added, and if we kept up that pace, it might signal that the economy is too hot and the Fed might have to hike more. And if it were way lower than 315,000, then you could have fear of recession, but we got kind of right in the middle there, so that was great. But even the case where the unemployment rate rising is seen as a positive.
Right. And let's wrap up talking about the millions out of the labor force. We were talking earlier, it could be long COVID, it could be immigration policies, it could be excess retirement. How is that impacting the labor picture?
Right. The labor force participation rate, which reflects how many people of the working age population in the U.S. are either employed or looking for work, and that's still a full percentage point below the pre-COVID level, and that has faced 3 kind of longer-term headwinds during COVID. One is long COVID, where 2 to 4 million people, it's estimated, are out of the labor force just because of long COVID, where there's their persistent symptoms prevent them from working. And then another almost 2 million are missing because of changes to immigration policies and also COVID preventing foreign-born workers entering the U.S. And maybe about half of those people could be STEM workers, which are hard to find jobs, hard to find people with those skills. And then lastly, we also saw early in COVID excess retirements, where about 2.5 million people retired early rather than risk getting sick at work. And as COVID has gotten less virulent with the Omicron strain and vaccines have come out, we've seen some people unretire, about 1.5 million it's estimated, but that still leaves 1 million people who are excess retirees at this point. So you're looking at 2 to 4 million from long COVID, 2 million from immigration, and another million of excess retirements.
It's a significant percent, you're looking at 5-6 million right there, so it is a not significant number. All right, Michael, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.